I remember about a year ago, I was extremely greedy. I wanted to get rich quick. I was taking Lambo lot sizes, over leveraging my account, trying to get rich very fast. And the markets humbled me very fast. The markets humbled me. And until I got tired of losing money, until I got tired of spinning my wheels, constantly losing, winning, losing more than I win, and I finally gave in to the plan and the proper process of compounding my account, that's when I took off. And I can sit here and tell you guys today that I'm about 75, 80, maybe 85 on some months discipline. I stick to my plan. I'm not super anxious to put a trade in. I enjoy what I do, and I also enjoy being patient. And when my mentor taught me how to use the Fibonacci, it was game over. It was the blueprint that I needed. It gave me a blueprint of the market. It showed me how the market moves. And it's always going to test that golden ratio. And I'm going to reveal that to you today. I'm going to show you everything is based on Fibonacci. And if you want to learn how to use that, and so you can always know where you're at in the market, then stay tuned. You know I'm going to lace you up properly. Let's get it.
Team take profits on the move. The movement is real. 50 pips a day, watch the money drip. Pips pay my bills. Pips pay my bills. Pips pay my bills. Pips pay my bills.
What's up, y'all? This your boy Jay Wayne, you know, representing Team Take Profits. And I'm super excited. For one, it's summertime and it actually feels like summer here in Michigan. Number two, I get to make another video for you guys, making sure that you're learning how to do this step by step. I can't give you everything at once, so I got to give you little by little so you can retain the knowledge. I don't want to just shove all the information to you and you don't retain everything. I want you to retain it, because once you can learn this stuff and remember to apply each principle when needed, man, you powerful. You're going to be a powerful trader. So I'm going to take you to the charts and show you how I use this Fibonacci tool. All right, guys. So we're going to get right to it. So I'm on a 4-hour chart. I prefer you to start learning it from the higher time frames. Okay, so you can start from the daily or the 4-hour. I would say, because most of my subscribers are more day traders, scalpers. Even though you're a scalper and a day trader, you still want to know what's going on the higher time frames so you can actually scalp the right way. You feel me? So you want to know the blueprint of the market. You want to know where the market currently is or possibly going to on the higher time frames. Okay, so I'm going to pull out a fib. All right, and I just want to show you, boom, this is my fib. This is what it looks like. Okay. That's what it looks like. So you got your 12.40, everything. You can see all the numbers here. You got the main things that we're focusing on is this, the 618 and the 50 and the 38 too. That's what we're going to talk about today. It's a lot to cover. This could probably be a series if I covered everything, but I'm going to cover the main things. So this is what it looks like, and I'm going to show you the numbers here. And you can screenshot that, write that down. All right, so there we go. All right, and so let's talk about it. So basically, we're waiting for price to make a high and a low. Okay, so it'll look something like this. You got your swing high and you got your pullback. Boom. So now, once you see something like this starting to happen, once you got your low and your high, you can pull out a fib now. you can now pull out a fib. You cannot, well, I won't say you cannot, but keep it very basic at first. There's a lot of people with many different type of Fibonacci strategies. Keep it simple, and then when you want to get saucy later, you can. You know, then when you want to start pulling out your own style and messing around with it and tweaking it, you can. But you want to have a firm foundation of it, or a basic understanding of it, before you want to start tweaking stuff. All right. So you got your swing low to swing high, and then you got your pullback. Now you can pull out a fib. Okay. You want to pull out the fib before it get too deep, because then you can miss the move. All right. This is the floating leg right here. You know, so this is where we're trying to catch a turnaround. So when it's about right there, whatever that is, and I can show you how you can know when the high is over and when it's actually pulling back. I can show you that in a second. So now you got the fib. You see, this would be an uptrend, right? Everybody can understand that, right? This is an uptrend. So let's move this to the middle. So that if that's an uptrend, it basically looks like this. Boom. All right, so price was coming down, pivoted right here, made a low, and then shot up, made a high, and pulled back. So you got your swing low to swing high. The main thing is you need to understand how to pull out the fib and place it on the chart. So if it's an uptrend, you want to put it at the low, at the wicks. All right, understand me, at the wicks. Not at the bodies, put it at the wicks. Okay, so I'm going to put my fib, start at the bottom, and whichever way it's going is the way you want to push the fib. So boom. And let me move this alert out the way. All right, sorry about that, guys. But yeah, so here we go. So we pulled out the fib at the low, and we pulled it up to the top, to the swing high. Boom, there you go. Now let's talk about the numbers now. Now that you understand how to pull out a fib the proper way, the basic way, now we can talk about numbers, the ratios. All right. So you're trying to catch somewhere at the 38.2, the 50, or the 618. That's where we're trying to catch a turnaround. Now, if it breaks these levels, then we're just going to replot it and look for a sell, you know. But this, if it blow past this low right here, this 100%, then we're ultimately looking at a reverse, and we want price to come back up into structure, and it'll probably come around a 38.2 or a 50 this way, and then come back and catch a sell from this level. That's if it blows past this low, this 100%. All right, but let's not go that far. Let's rewind it. So let's say it comes down here. You want to catch that. See, that's why you want to pull out a fib when it's just turning around, when it's pulling back. So now you can kind of see the levels. Boom. Let's say it hit off the 50. You can put a 0.5% at the 50 and another 0.5% at the 618. Well, what do I mean by that? If you want to take a $5 lot size total, then at the 50%, take out like $2.50 lot size. And then if it gets down to the 618, take out another $2.50 lot size. That way you all in, and then boom, you know, take the trade. You could put in like a buy limit at these levels, 50 and the 618. You could put a buy limit in. Now, I'm not just trading Fibonacci just to trade it as a standalone strategy. I'm coupling it together with my other strategy that I'm using. You know, I'm putting the Fibonacci and combining it with the basics, you know, price action and market structure. Okay? You must do that, because let me tell you something. If it's pulling back and you got a 50% here, if the 50 or the 618 has structure over here in the left, it's a resistance or it's at a reversal zone, then that's powerful. That's powerful. That's when I really take note. But if the 50 and the 618 is in like in the middle of a zone, it's in no man's land, then I don't pay that much attention to it. I do a little bit, but not as much. Okay, and the fact that it's on a higher time frame, that holds even more weight. Okay, that holds even more weight. So I just want you to understand that. Now let's reverse it. So now let's say it's on a sell. Okay, market is pushing down. So what does that look like? Well, price was pushing up, and then price decided to drop. It made a high right up here. It made a high, and now it's pushing down. Now your job is to find the low. When is the low established? Well, I'm going to tell you that in a second. And then it pulls back. Now, as you identify the low and as it's pulling back, you got to hurry up and pull out a fib. Now, it's a 4-hour chart, so you got time. Okay, but the main thing is identifying this stuff. So remember, we pushed up last time, the Fibonacci tool. Now this time we're gonna go from the swing high at the wicks, not the bodies, at the wicks. And what do you see it pushing, down or up? Okay, you see this leg pushing down. So start it up here, swing high, and push it, the Fibonacci, to where the market is going. Swing low. Boom. So now we're trying to potentially catch a sale at the golden zone, the golden ratio, 618 or 50% level. I have them both golden because that's a zone to me. So what I would end up doing is pulling out like that, and then I just delete the fib, and I know my golden zone is right up in here somewhere. So then I start looking at price action as it begins to hit that zone. I look left over into this side of the market and see, do we got any resistance, any strong reversal zones? And if you do, then that's great, because this is a 4-hour chart and that's going to be powerful. And then we could possibly catch 50 pips coming down, you know. So now let's back up a little bit. Let's pull out that Fibonacci again. So if price turns around at the 38.2, as we see oftentimes, then that's a shallow retracement. Okay, shallow retracement. And if you get a bounce from the 38.2, you will potentially, again, it will probably, and I can't guarantee you, but it's a shallow retracement. Price wants to get back to that 50.61.8. Okay. So eventually it's going to work its way back up, but you just, as the market keep making lower lows, you got to keep pulling out that fib. All right. So you just keep pulling out that fib. All right. So the market drops again. It drops again. And that's when you want to learn how to use the Fibonacci extension. Okay. That's what I'm saying. Part 1, part 2. Maybe this is part 1. If you guys are interested in part 2, which would be the extension, okay, because we want to know how far we can sell to, then comment below, because I would love to show you guys if you want to see it. But if you don't care about it, or if this is beyond you, then I don't want to make the video yet. And then the price pulls back again, and now you just pull out the fib again, and you just keep capitalizing. You keep capitalizing. Okay, boom. And we just keep working. That's what I'm saying. This junk, or I said junk, but but that's what I'm saying. Like this Fibonacci tool gives you like the blueprint of the market, if you want to call it that. It gives you the framework. And then you need to understand how to trade market structure and understand price action to actually enter, or have some kind of strategy you use to enter into the market and make your money. You feel me? So that's, and then a lot of times if price, the deeper it goes though into the deeper it goes into the like the Fibonacci, like the pullback, the less momentum it has to shoot down. Okay, so like a lot of times you will get, it'll come back to the 23.6, and then that's showing a lot of downward momentum. So it hit the 23.6, we're going to be dropping some more. At that point, you were hoping for the 618 or the 50%. You were hoping that price came back that far, but it didn't. Let's say it pulled back to 23.6. This is when it didn't happen. It didn't work out that way. But you need to fall back on the basics. That's what I'm saying. We don't base everything off of this field, but it's a great tool, and when it's time to apply it in the right situation. And so I'm about being a well-rounded trader, not just one way. I'm an educator. I love teaching you guys. I have to be well-rounded. So I'm constantly learning things, okay? And God blessed me this gift to be able to understand fast and take it in and then regurgitate it to you guys in the most simplest form possible. Okay, so there you go. So if it pulls back to the 23.6, you need to be able to be skillful enough to capitalize on that sale. Okay, it just falls back on your basics, fundamental technical analysis or whatever your strategy is. Okay. But I'm just showing you what we're looking for. The 38.2, a lot of times it'll bounce there. So the main ones right now I want you to focus on is the 38.2 and the 50 and the 618. Just focus on those three right now. Okay? There's more to learn, but you have to start somewhere. And I ran from Fibonacci for so long. And because the people were making it so complicated. But really, it's not that complicated. It's not that complicated. I don't need to pull out Fibonacci fans and all of this other stuff to make money. Let's keep this as simple as possible. And so if I had somebody to break it down simple like I'm trying to do for you guys, I wouldn't have ran from it for so long. Okay? So that's basically it. Now what I want to do is go to the charts and just show you. Now, it can get confusing because you can lose track of where you are in the market with this thing. So what I want you to do is I'm giving you guys an assignment, some homework. What I want you guys to do is find what area you wanted to make money off of and then figure out how could the Fibonacci helped you or assisted you in making that money or catching that move. Okay, so if you wanted to make money on this sale right here, then you need to look in the past. Then you need to pull out the fib from this way. Okay, so let me show you what I mean. Find what area. That's why I love the replay button. So boom. Okay, let's say this drop here. Remember how I showed you in the drawing that I did, the illustration? Here's that swing up. All right, swing high, and then it dropped, made a low, and then it pulled back. Just like in the diagram that I showed you up here, right? Same thing. It's just not as clean. It's noisy, right? So, okay, so you got your high and you have your low. Pull out a Fibonacci. Swing. It's in a downtrend right here. Okay. Swing high, swing low, and put it on the wicks. Now here we go, game time. So now go back to the teachings that I just gave you. 38 to 50%. That's all I want you to focus on right now. There's other things to learn later, but right now focus on those two. So now you got to be patient. This is a 4-hour chart. So yes, we can still make money on all of these moves that's happening in between, but guess what? You have a framework. You have a blueprint to where the market wants to go and possibly turn around if there's structure. So now I hit the 50% level in that zone. Remember, it's a zone. It's not the numbers like set in stone. It's an area. I want you to focus on the area. Okay? Okay, look at that. We could have capitalized off that drop. Okay, now it's coming back up testing. Now it's coming back up and testing the 618. Remember I said you could put a buy limit in. Multiple times we could have sold. Multiple times. It came up here, showed you on a 4-hour chart, a little wick, a little inverted hammer, okay, a little hammer right there, and then drop right underneath the 50. But look back, was there structure? Was there structure where it came up to and turned for about, let's see how many pips this was. That's 100. Let me see. That's 156 pips. Okay, because you understood market structure. Okay, and price action. So boom, turned around right underneath the 50 because there was structure. What do I mean by structure? Let me look at this. Look at this structure here. Okay, right up in here, all up in here. You see that. All right, so let's delete that. Then price pulls back, but did not break this low. Let's pull out the line again. Price pulled back right here when we caught the 153 pips. Price pulled back, but did not close below that low. Boom. And it showed you a hammer. Another hammer. Maybe that's an inverted right there, but that's a hammer right there. Boom. Look like a baby Thor's hammer right there. Now you ready to catch it back on up. All right. Now we could talk about take profit. That's where you want to know the Fibonacci extension, how far to go with this and when to take profit. I have to teach you that later, guys. But look, now it's pulled back into the golden zone. Another drop at the golden zone, showing you key. That's what I'm saying, guys. We don't just use the Fibonacci alone. We couple it together with the basics. What did we learn in the basics? Okay. This is what I'm teaching my team, to understand all of these things and how to put it all together. Look at this. Okay, reversal candlestick patterns. Okay, guys? Basics. So couple it together with that and it's powerful. Now, how many pips have we caught it again? Let's say we caught it about right up in here. Another 100 pips. 118 pips. This is gold, so the pip count is a little different. You got to know how to move the decimal. Okay, guys? But did it close below the low? You feel what I'm saying? Did it close below this low right here? No. So we do it again. Okay, and now you have to have some kind of strategy or whatever you use or however you trade to get back into this. You got to have some entry strategies, okay? Some rules to get back into this trade. But all I'm saying is it didn't close below the low. Let's go and get what you can get now. You know what I'm saying? So it's a beautiful thing when you know how to use it and properly place it. And let's just play it out for fun. All right. And then that same zone that I drew up, that price came down but showed rejection, it finally broke through. You don't delete this zone. You keep it there. And what do we get? Once it breaks below that zone, we sell down here. We kept that zone. It showed that it was holding up. Look, let me show you something, guys. Let me delete these lines. I can't make this up, guys. I can't make this up. Come on, team. Pay attention. Look how price showed rejection at this zone. Look at them wicks in there. Look how price showed rejection. Okay, look how price broke through it and held at that same zone. Now price drops from the 618, okay, and breaks through that same zone. That's what I'm saying. Look what kind of candles broke through that zone. Big red engulfing candles. No green candles were in here. That is a powerful zone. That's what I'm saying by price action. Combined with market structure. Combine it with the Fibonacci. Let's make this money, baby. Now y'all see what I'm saying, why I be so hyped when I say that. Let's make this money, baby. Because after a while, man, this junk becomes simple and it's a game of patience and following your rules. What they say, a wise man once said, rules save lives. Follow your rules. Don't try to beat the market. Wait for it to happen. Wait for your signs, your confirmations, and then go for it. Then you have to go for it. All right. So boom, we're gonna stop there. This is part 1. If part 2 is requested, highly requested, like this video was, you know, I'll come through and lace you guys up and come out with part 2. All right. So it's more to learn about the fib, but that was the basics. And I hope this video was informative. Alright guys, so I hope you enjoyed this Fibonacci training. We don't base everything off of the fibs. It just gives us a blueprint or an outline where the market is currently or where it's about to go to potentially. We still have to go through the basics and master those, because every strategy, every tool is going to be based or fall back on how well do you know the basics. How well do you know market structure, price action, and you need to know a little bit of fundamentals, you know, if you can get to that level, because if fundamentals is playing a role, anything can happen. All right, anything can happen. So guys, hit the like button if this video was informative. If you learned something, comment below, let your boy know. I love helping you guys, because ultimately my mission is to help you guys become a profitable trader so you can get your time freedom back and start empowering people that's around you. So that's my mission, that's my goal, and I'm here for you guys. So don't forget to like this video, comment, and subscribe. And let's make this money, baby. Peace.
Watch the money drip. 50 pips a day, watch the money drip. Pips pay my bills. Pips pay my bills. Pips pay my bills. Pips pay my bills.